hard work, and we haven't really made a dent on planet Earth in terms of the investments, etc. Primarily being from India, being active in the Indian markets. Uh, at around that time, we realized that less than 3% of India invests in this kind of products, mutual funds, equities, and so on. And a thorough analysis, and we realized that people are completely disillusioned and shaken up with some of the actions, some of the events that happened in the Indian investment scenario. So as a result, we wanted to set things right. We went out nooks and corners, shadi halls, masjids, madrasas, different venues across the world, just trying to let people know that investing is a safe business. Your money is safe as long as you follow some tools. So that's what I've been doing for the past 5 years, creating awareness in terms of some myths that people hold about investments. One of the myths that people hold in terms of investing in the stock markets is that it's risky. And we talk about why is it not very risky, or as risky as other asset classes when it comes to invest in the stock market. The risk can be managed and so on. The other myth is you need a lot of money to start investing in stocks and shares. So that's another myth we bust by demonstrating how you can start investing with as much as $2 on a regular basis, right? So even $2 is enough to start off an investment account, at least in India, maybe similar story across the world. The third myth with respect to investments is that it takes a lot of your time. You need to be in front of the terminal 24/7 so that you can make profitable trades and invest profitably. And that again is a myth. You don't need more than 15 to 20 minutes, maybe half an hour on a day-to-day basis to be able to do that. So we have been doing this kind of activities through free seminars, through paid courses, and alhamdulillah, that's another vertical that I've been working on for the past 4-5 years, educating people in the field of investments, alhamdulillah. Right, so before, whenever a story begins, people first and foremost talk about the hero, right? Who is the main protagonist? Who is the main person that we are talking about, the main actor? But I'm going to start off this presentation with the villain. So my question to all of you is, when it comes to your wealth, who is the number one enemy of your wealth? The biggest enemy of your wealth. It could be a concept, it could be an idea. You can type in the chat box, right? And inshallah, let's see what are the responses. When I hold these kind of sessions in Mumbai, right? Mumbai is heavily influenced by Bollywood, right? So when I ask this question to people in Mumbai, that who is the number one enemy of your wealth? And pat comes the reply, number one enemy of my wealth? My wife, right? So I know that's the Bollywood influence, but nonetheless, let's hear from you as to what, according to you, is who is the number one enemy, right? We see these responses: ourselves, inflation, lack of financial literacy, right? And all right, let's hear some more from you. What else? Greed. Okay, very nice. Greed that's a big one, yes. But at the end of the day, who is greedy? Yeah, riba, inflation, lack of financial literacy, we ourselves. All right, perfect. Right, so these are around these lines. We get the responses time and again that these are the number one enemies. Ourself, extravagance, right? Being a spendthrift. It could be being greedy, being fearful in taking decisions, in investing, etc. Taxes, that's a very common one. And then another very big one now is Ponzi schemes, right? So that people who know the Indian scenario, they know very clearly there were some nasty Ponzi schemes which has eroded a lot of wealth of Indians. and some really big names involved in them. So these are the feedback that we get, and all the answers are right answers from your perspective of whatever you are dealing with. And I am looking at one particular answer. The number one enemy of your wealth is nothing but inflation. Inflation is something that impacts the rich and the poor. The richest people in the world, the poorest people in the world are at the impact of inflation. Inflation is the rate at which things get more and more expensive in an economy, right? And that is the number one eroder of wealth, especially in emerging markets like India, Pakistan, Bangladesh, Sri Lanka, Latin America, etc. Maybe in Western countries, things are slightly different. Maybe in Middle Eastern countries, things are different. But when it comes to these markets, inflation is the number one. So if I have ₹1,000,000 in cash and I plan to keep it away, lock it up, not touching it for the next 10 years. In India, the inflation is the real rate of inflation. The government declares an inflation of around 7%, but the real rate of inflation is about 12 to 14%. It used to be around 10 to 12%, but at the moment it's gone slightly higher, right? So if we take the real rate of inflation, even at 10%, 5 years down the line, that ₹1,000,000, if I retrieve that ₹1,000,000 and if I want to use it, how much value will it hold? Anyone? 10% inflation, 5 years down the line, how much value will that ₹1,000,000 hold? Please type in the chat section. Let's hear from you. Right, so that 50%, that's right, 50%. So absolutely, around 50%, right? So we are talking about ₹500,000, ₹550,000, around that much, because that is all that ₹1,000,000 can buy in this situation, right? So that's the scenario over here. And this is how inflation impacts everyone. And we need to generate returns which are inflation beating. Inflation beating is returns is the only solution that we have to get one step ahead to beat the whole phenomena of this inflation, right? And how do we go about doing that? So when we look at the Sharia compliant investment options available, we have the option of gold, right, which is Sharia compliant, right? But then the returns of gold, normally if you look at the CAGR, the compounded annual growth rate, the average return year after year, for the past 40 years, the average works out to around 4 to 5%, considering the sharp rise that we've seen in the past couple of years. So in spite of that sharp rise, we're getting a return of about 4 to 5% CAGR over a long term. If you look at it from a shorter term perspective, 1 year perspective, maybe about 30%, but longer term perspective, we are just getting 4 to 5%. Going forward, probably the same rate would be valid, right? So 4 to 5%, at least from an Indian perspective, is not at all inflation beating. The rental returns on property, if we invest in real estate and we plan to get rental returns on them, then the rental returns, I'm talking about India generally. By the way, just let me a show of hands, or maybe you can just type in the QA box. How many people, just type the country of your origin. So some of you are from India, some of you might be from Bangladesh, our friendly neighborhood, Pakistan, and maybe other countries, Philippines or US, UK, South Africa. So just type your country of origin. So I have a sense of which different countries are people from. Right, so we have a lot of Indians and UK, Canada, wow, Egypt, mashallah, Philippines, Somalia. All right, So completely spread out. So a lot of things that I'll speak about will be from a more localized concept, but then these things are valid globally as well, right? The percentages might differ. In India, the inflation is 10, 12, 13%. Maybe in your country, the country of your origin, it could be quite controlled at 2 to 3%. In an economy where the inflation is 2 to 3%, the returns that we get are maybe sub 1%, maybe negative. US is giving negative returns, negative interest rate returns, etc. So these are some of the things that you need to keep in mind. But I'll try and mostly I'll be talking from an Indian perspective, but then I'll make sure that it is more global and so on. So inflation is the number one problem. When we are talking again from an Indian perspective, 2 to 3% return on real estate, a 4 to 5% return on gold, all these are definitely not inflation beating. But then there is one area where we get returns in the region, and 40 years compounded annual growth rate, average return year after year for the past 40 years, we are getting around 17% through equity investments. And that's why I am focused on equity investments, promoting that as an asset class, which is kind of inflation beating, and which kind of gets us that kind of return, which helps us in creating serious wealth year after year. Now, just a little bit about that as we go forward. But some of the benefits of equity investment. Now, this is universal across the world. You become a partner of a huge business. By investing in a company which is listed on equity markets, you get to enter and exit the company very conveniently. And at the same time, these are mega corporations, some of them, and you get to become a partner of this huge business. So we are talking about, say, Unilever, Apple, Google, Tesla, right? Tesla. So all of these companies, and India, we are talking about the Tata Group, Asian Paints, these multinational companies out of India. So you get a chance, you get an opportunity to become a partner of this huge business, and the profits that they make, the dividend get distributed amongst all the partners, all the shareholders, as we are called. In India, there is just a 10% long-term capital gains tax on the profits that you make. So if you are selling off after 1 year, then the returns that on the returns, the capital gains tax is just 10%. Short-term capital gains tax in India is just 15%. In the subcontinent, it's more or less on the same lines, but maybe in the Western countries, the capital gains tax would be same as the income tax brackets, and it could be slightly higher. But in India, we have a huge advantage because of this low tax regime that we have been following. In the past, actually, before this government came into power and changed the laws, there were actually no taxes in the long term. So any investment that you sell in the long term, after 1 year of investment, there were absolutely no capital gains taxes. But this government has introduced that. So now there is this small tax component that we have to deal with. It's very inconvenient to invest in equity shares these days, on call, internet, apps, etc. And as we discussed, as compared to the other asset classes, the returns on equity is definitely much higher. But when we are speaking in terms of financial planning, it's important to invest in different asset classes. In the Middle Eastern countries, you have a lot of options of investing, for example, in sukuks, right? These are securitized bonds, Sharia compliant bonds, right? So you have the option of investing in sukuks. It's a good idea to invest a certain percentage of your wealth in these kind of sukuk products. Unfortunately, in India, we don't have sukuk products, right? So we have to do with certain other products that are offered, which are rent-based, which offer rent-based returns. So we have to go replace that for debt. But the portfolio has to be diversified. About 5 to 10% must be invested in gold, digital gold if it may be, no problem, but that kind of investment has to be there. You must also diversify in different mutual funds and then directly equity shares large cap, small cap, mid cap, for trading, for wealth creation. So there's a whole way of asset allocation which needs to be looked into. How are equity shares Sharia compliant? So for that, we look at certain qualitative criteria for prohibition. So any companies involved in production and sale of liquor, they are out. Tobacco products out. Vulgar entertainment, cinema, pornography, stuff like that. There are companies listed in the US which are actually, they make pornographic movies. There are companies listed in Australia which are actually prostitution companies, right? So these kind of companies, obviously, you cannot invest in, but otherwise as well, all corrupting, vulgar entertainments, people in India, Pakistan, companies producing Saas Bahu serials, you know what I mean, right? All of that is actually vulgar and corrupting, and any companies involved in that are out. Lending and borrowing on interest. So banking companies, finance companies, non-banking finance companies, small banks, microfinance companies, mutual fund companies, any of these companies which are involved directly or indirectly in interest-bearing products. So all of them are out. So that's how, in India, for example, we have 6,500 companies listed on the two main stock exchanges here, the Bombay Stock Exchange and the National Stock Exchange. And out of the 6,500 companies, we do have 1,400 companies which are Sharia compliant, right? So similarly, when you look at the Karachi Stock Exchange, you find that there are, out of 700-800 listed companies, you have about 60-65 companies which are Sharia compliant. And similarly, if you're planning to invest in the US Stock Exchange, then the Dow Jones Islamic market indices, they have a substantial list of about 700-800 companies which are Sharia compliant. So that way, the universe of investment is large. You can look at the opportunities in the Middle Eastern countries, the Dubai Stock Exchange, the Qatar Stock Exchange, Saudi has a stock exchange, very limited opportunities, very small exchanges as compared to the New York Stock Exchange or the National Stock Exchange in India. But still, if you need to invest over there, you would get a set of Sharia compliant stocks. Saudi markets, you have the mother of all issues. Whatever Saudi does is mother of that particular concept, right? So mother of all public issues was the Saudi Aramco issue, and the biggest IPO ever on the face of earth. So those are the options available in the Middle Eastern markets, right? What are the quantitative criteria for prohibition? So there are some financial figures based on which the prohibition comes into play. So if the borrowing of a company is more than 25% to total assets, then we cannot invest in those companies. And the interest income is more than 3% of the total income, that company is out as well. We cannot invest in that kind of company. If the cash and receivables are more than 50% of total income, that's out. And then finally, whatever the interest income the company is earning, in the proportion of your shareholding in the company, you need to give away, purify your wealth by giving away that amount in charity. So you need to purify that. So on a pro rata basis as well, and the percentage, you need to follow that, and you need to just give away 2%, 1%, 1.5%, whatever the percentage be of interest income, you just need to give that away out in charity. You sell the stock or you don't sell the stock, if you're holding it, you just need to give that away in charity. So these are some of the conditions on the basis of which investing in equity shares is considered to be compliant or not. Now, a lot of you are kind of non-resident players in Kuwait or other Middle Eastern countries, right? So you are either a non-resident Indian or a non-resident Pakistani, and you are an expat over there, right? So you are struggling to make an income for yourself. You are away from your friends, your family, your roots, right? And you do all of that and yourself first. How do you treat your loyal and faithful monthly income? So as soon as we make our salaries, our profits, etc., Generally speaking, how do we go about spending whatever we earn? Any ideas? How do we spend that money? How do we spend our incomes? All right, there are some questions. Inshallah, we'll answer the questions later on. Yes. So generally speaking, what we do is, as soon as we get our income, loyal, faithful monthly income, we go about spending it all away on permissible expenses, household expenses, your mobile bills, your internet bills, your data, your loan repayment, school fees, whatnot, right? So all of these expenses, which are valid expenses, but we end up making the providers of these services rich by paying them first, right? Talking about Mumbai, 8.5 million people travel in the local railway system, the local commute system, every single day. Every day. Anyone who has seen how people travel in trains in Mumbai, the local commute is a nightmare, right? People, about 10 people die out of accidents related to the local trains. In the lockdown, the trains are shut. They are not fully operational even now after so many months. But that's a huge struggle. 8.5 million every day, and around 4,000 people lose their lives every year just by virtue of traveling so that they can go to work and come back home. And as a result of all of this, as the end result of all of this is what? People are putting their lives at stake, and what do they get in return? A monthly income, which most of it gets spent in paying others rather than yourself. So by even after taking such a lot of risk, what is the net result? We are just not making anything at all. It's all, most of the time, it's all spent away. In a rare case where someone looks at his bank statement and sees that there is $100, for example, which was saved, he was not able to finish it off. Even in that situation, now he will throw a party, buy a mobile phone, do something, make sure that he will spend it all away, because saving is not on the agenda at all. But if we change this mindset and start paying ourselves first, right? This is a concept which is discussed by Robert Kiyosaki in Rich Dad Poor Dad, a book that you must read. It is essential. Just download it today on Kindle, get it from the bookstore, Amazon, whatever, but read this book. This is essential reading when it comes to finance and investments, right? Not necessarily Sharia compliant. The concepts might not be necessarily Sharia compliant, but when it comes to the behavior, that's it all away. But if we turn this around, if we pay ourselves first, and then with the rest of the money, budget it out, right? Then what are the results that we could expect? So in front of you is a chart which suggests that, for example, if you manage to save $1,000 every month, right? And you keep saving that for 1 year, you're sitting on 12,000 US dollars. You invest that. Now I'm talking about the Indian context. Maybe US, it would be slightly different. We're not talking about a modest return of 15% in US. Maybe 5% is substantial over there, right? And in similar case, in different markets, the numbers would be different. We need to figure that out, and maybe we can have it on a one-to-one call, etc. I'll get the numbers for you. But if in Indian context, we are making 15%, not 17%, not the 85% return that we made in 2009. We are not talking about the exaggerated or the real numbers, one-off happened 10 years ago. We're just talking about a CAGR figure for the past 40 years, 15%. So on 15%, I'm making 1,800 rupees or US dollars. Additional $12,000 saved next year, complete package, it works out to 25,800, which is reinvested. 3870 at 15% additional. This goes on. So over the period of 5 years, I have saved $60,000, but my investment, simple power of compounding, my investment has grown to $80,000. 10 years time, I keep doing this, saving $1,000 a month, right? It could be 10%, 20% of your income, but you keep doing that consistently without compromise. And 10 years time, that grows to 243,000 US dollars. 15 years, you keep saving $1,000 a month consistently without breaking, 570,000. And just keep an eye on the returns column. Every year, what are the returns that you're making? On the 15th year, just the return is 72,900 US dollars, right? 20th year, we are talking about 1.2 million US dollars that you would have accumulated by investing in this manner. Now, inflation is high in India, the returns are high, that's acceptable over here. Even if the returns are low in other markets, not a problem, but this kind of saving will keep you well ahead of the crowd who are not adopting this practice. How do you do this? Look at the mutual fund sector in your area. Start off with a mutual fund if you need to. Look at the equity markets, and we have an option of doing what is known as stock SIP. So we set up a basket of investments with our brokerage, and they would then set up this kind of a SIP where automatically you are buying 4 to 5 shares of different companies and then keep accumulating that month after month. And that's how over a period of time you have a beautiful portfolio, substantial shares, which would give multiplying returns. But you also need to look at some very important factors like what time should you sell? When should you sell and book your profits? That's very important. That's as important as investing. So rather than just blindly going on investing, you need to know when do you quit a particular stock, when you book profits, etc. So if you do not have the expertise to do that, the best way to start doing that is investing through mutual funds. And in India, we have a few Sharia compliant mutual funds. That's a perfect way to start. If you are a non-resident Indian, just get in touch with us and start off that mutual fund account, and then you can build up the other ways of investing as you go along. You have a lot of options in the Middle Eastern countries as well, so you can look at those options as well and set up your Sharia compliant investment and mutual fund accounts in those markets. Does this sound good or great? Does this sound interesting? Is it good or great? Yeah. So this kind of power of compounding, which Albert Einstein said is the 8th wonder of the world, which a lot of people are not aware of. So in the words of Einstein, 8th wonder of the world, which a lot of people are not aware of, that's the power of compounding for you. So what does Idafa Investments do? We help you with equity investments, with mutual fund investments, with retirement planning. Retirement planning is actually, when we hear the term retirement, it hits us like a bad news. When we hear the term death, it hits us like a bad news. When we look at poor health, hospitalization, it hits us as bad news, right? But what we need to know clearly is that if your country is not taking care of these needs and requirements, then you need to plan for such things, right? So in India and other countries in the subcontinent, you are on your own. You need to plan for your retirement. You need to plan for your taxes. You need to plan for your health, hospitalization, health insurance, etc. And all of this needs to be taken care of. If you are in a market like Pakistan, Bangladesh, Middle Eastern countries, and Far Eastern countries, etc., and if you have the option of takaful or the Islamic insurance, that's something that you need to go for, because these are the things that are the bare essential. This is where the financial planning starts from. The first set of instructions, the first set of actions that you need to take are taking care of your emergencies. So your health, your life, your emergency fund, all of these things need to be taken care of. You're building a corpus for your retirement. These are things that you need to take care of. And then once these things are sorted, do you move on to other aspects of wealth creation, right? So that's the step-by-step approach to planning your finances. So we take care of or cater to all of these kind of investments and financial solutions. And inshallah, very soon, uh, we are in talks with people, nothing finalized as yet, but we are looking at setting up an office in Dubai so that we can service not just Indians, but people from across the world by following Sharia compliant financial solutions, investment solutions. Uh, 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 Maybe inshallah, in tune with your country of origin, right? So we are making those kind of tie-ups, and inshallah trying to set up that office in Dubai very soon. And maybe that's when a lot of you would have access to our set of services. Non-resident Indians, you already have access to our services. Just get in touch with us, and we already have a lot of NRIs investing with us. So some of the company and products that we are associated or empaneled with is Tata Mutual Fund, which offers, this is the first Sharia compliant mutual fund in India. So we offer Tata Ethical Fund. Taurus Ethical Fund is the next Sharia compliant mutual fund scheme in India. In India, we have this as a tax planning product, not applicable for most NRIs. Rehbar Financial Consultants. This is the debt replacement or a rent-based sort of capital guaranteed product that we deal with. And then there are other companies which offer Sharia compliant products. We have a digital gold solution for Indians as well as non-resident Indians. So these are all the options that's available. And what we also offer as a part of our training and development activities for Muslims to be able to invest in a Sharia compliant manner, we offer through Azadi School for Financial Freedom, we offer Azadi Essential, which is a free seminar on financial freedom. It's available on our page on Facebook as well. Azadi Intensive is a more goal-based, you're designing your life based on your purpose, vision, and goals, and how to go about achieving the goals. So we discuss those strategies over there. It's a very powerful, very intense program, a must-do. We have something known as the Azadi Associate, which is a partnership program where we partner with individuals from different regions in India and across the world. So we have our associates in, for example, in Saudi Arabia, in Dubai. So associate program is where we create a partnership with you. You go through this 3-month training, and then you work in offering these solutions to the set of people who are around you in your region, in your country, etc. And then finally, we have what is known as Azadi Next, which is a 3-month program on how to become a professional investor, right? So this is a very powerful program, and Alhamdulillah, I am actually very proud of being able to lead this program. We had someone today who was going on and on about how this program, when done by their friends, relatives, etc., have transformed their lives. The lockdown was disastrous for a lot of people, but people who had done this program, Azadi Next, they were able to use that time to build their wealth even while they were locked in their houses, right? So that's Azadi Next. Several success stories over here, but we don't have time to go into that. And then we have one short program. It's a half-day program, 5 hours, which is how to make 1 crore. 1 crore is 10 million rupees, right? So how to make 10 million rupees by investing the Sharia way, right? So this is a program which is, of course, universal, but the examples that we give over here are more tuned to the Indian markets. But have very interesting programs where we talk about the basics of equity investing, busting some stock market myths, fundamental and technical analysis, powerful tools to start with the 1 crore formula. We call this a 1 crore formula, or from an international perspective, a 10 million formula, where how do you go about making 10 million rupees in 5 to 7 years by investing as much as $150 every month, right? So that's this program. It's a very powerful program, alhamdulillah. The next one is happening on Sunday, but the one after that is on 6th of Feb, which is a Saturday. So that would be probably more suitable for all of you in the Middle East, inshallah, from 9 a.m. to 2 p.m. India time. So that would be slightly early for you, but maybe we can tweak the timings if a lot of you are interested. So maybe ICK, Rafiq Bhai, if you can coordinate, we can have a special program for the Middle Eastern audiences at a more suitable time from the Gulf perspective. So where do we go from here? The journey of 1,000 miles starts with one step. You need to start an equity investment account wherever you are, back in your home country, wherever you are at the moment, in Dubai, in Kuwait, in Qatar, in Saudi, wherever you are. Just start what is known as a systematic investment plan, wherein you start saving a certain amount month after month and generate extraordinary returns over a period of time. Just start an equity account, a mutual fund account, start investing in US. If you are an NRI, start investing in India, start planning for your retirement, build that corpus which will give you returns which can sustain your present lifestyle. So that's really important. And if you are interested in monthly incomes or wealth creation, get in touch with financial advisors, financial planners in your region. They might charge a fees wherever you are, but get in touch with proper financial planners who will guide you in building your wealth based on your goals and aspirations, not based on their goals and aspirations of making money. So brokers are interested in making people invest and earn a brokerage. So not their goals and aspirations, but financial planners who are interested in looking at your goals and aspirations and based on that, guiding you on how to go about investing, right? So I have finished my presentation slightly before time and it's over to you.
Jazakallah khair, Brother Ashraf. Such a beneficial talk. I myself learned a lot about financial, although I am not a financial guy. And I'm sure in the audience there must be many who learned a lot. And of course, I mean, this topic interests and affect to everyone. So of course, this is a very interesting topic. So now we will open the floor for the questions. So brothers and sisters, if you can please type your questions in a Q&A chat box in the Zoom, if you are watching in Zoom, and if you are on Facebook Live, so please type your questions there and we will pick up the comments from there. Brother Ashraf, would you like me to read the question or you are going to look at the questions?
Yeah, I think that would be better because you can choose between Facebook and Zoom.
Yeah.
And
Okay.
what is relevant.
So I guess when you were presenting that slide about the Sharia compliant products, so there was a question about what about trading on manufacturing companies borrowing on interest.
Right. Right. So on that count, so the general consensus of scholars on that is that, in secular markets like India, US, UK, etc., we don't have as many Islamic banks as we want. Even in the UK, for example, in India, we don't have any Islamic banks at all, right? So from that perspective, the scholars for such secular markets, they have put some thresholds or tolerance levels. So these tolerance levels mandate that so the global norm based on the Islamic Fiqh Academy meetings of all the global scholars in Jeddah, the global norm is that if the borrowing is more than 33% of market cap or assets, then you cannot invest in such companies, right? So since there are no options and these companies are not required to follow the Sharia norms because they are owned by non-Muslims. So, but the basic criteria, the basic pretense is that they are equity companies. They are profit and loss sharing companies. That's the primary thing that they are following. And then to run their business, to manage their working capital, since they borrow, they have these thresholds have been put in place. So one of those thresholds is the borrowing should not be too stretched, not more than 33%. The norms that we follow in India are still more stringent. So we follow the TASIS, Taqwa Advisory norms, which are on the board of Taqwa Advisors. We have Mufti Barkatullah from London, Mufti Khalid Saifullah Rahmani Sahab from Hyderabad. So these are the world-renowned scholars who are formulating these norms for India-specific companies. So for India, it's 25% to assets, right? So if companies are borrowing beyond this, then those companies are out. And as a result of this, for example, Tata is a known brand name across the world. And Tata Motors is a decent company making automobiles. It has bought over Jaguar, Land Rover, and it owns JLR. It owns Daewoo Motors in Korea, South Korea. So that is the size and scale of this company. Beautiful company, everything good. But since its borrowings are substantially higher than the threshold set, because it wanted to buy over Jaguar Land Rover, it stretched itself in terms of borrowing. And as a result of that, we cannot invest in Tata Motors. Similarly, there are so many other companies. Either their interest income is more than that 3% or 5%, their borrowings are more, their cash positions are more than what is mandated. So as a result of all of that, now we cannot invest in these textile companies or automobile companies or infrastructure companies, etc. So these norms need to be followed, right?
Jazakallah khair. Before I read the next question, I would just request the audiences who wrote these half questions, maybe they were typed during the lecture. So Afnan, and there is one anonymous attendee, and Mateen, if you can please type your full question so I can read that. So the next question is from Momin Umar Farooq. Says that I read that the amount spent in share market actually never goes to company at all. Company do not any advantage of the stocks traded once they get amount from IPO and promoters.
Right, that's a valid question. Uh, so what happens is there are two separate worlds. On the one hand, one side, we have the companies, which when they started off, they collected these funds from investors and came out with an initial public offering, raised the capital and started the business, right? And as they carried on with the business, they made profits. The profits were plowed back in the company. And as a result of that, the valuation of the company increased year after year. So that was what was going on over here. Now, by virtue of coming out with the IPO, the company, the shareholders of the company had the option of entering the other world. And the other world is where the shares get traded. Now, based on the valuation of this company, the trading activities that happen on the stock exchanges is an exit option for the shareholders as well as an entry option for the new shareholders. So this is the secondary market. That was the primary market through which the company came into being. Now, whatever actions happen in the secondary market, right? Trading of shares, people buying the shares. How are people able to buy? Because there are original shareholders who are selling their shares. And this kind of activity continuously keeps going on over here. People exit and people enter. People exit the company, people enter. So that activity on the stock market happens purely on the basis of demand and supply situation. So there is a perception of Google, there is a perception of Apple, there is a perception of Tesla, there is a perception of Unilever. Based on the perception and the performance of the company, actually, the market prices keep fluctuating. The actions on the market does not have an impact on the company, but the actions of the company has an impact on the market. So you are correct when you say that the company does not get, when I pay the money and buy the shares of a company, the company does not get anything out of here. But the shareholders who's exiting his position in the company, he gets the money, he leaves the company, and you as a shareholder now get to enter the company. So that's how these two worlds operate simultaneously. I hope that answers the question.
Jazakallah khair, Brother Ashraf. The next few questions, they were asking about the name of the book, and the Azadi admin, he has answered. The book name is, I guess, Rich Dad, Poor Dad by Robert Kiyosaki. Is
That's
that
right.
correct?
Right.
All right. Okay, so next question is from Nazim Parker. Is investing in mutual funds Sharia compliant? What are the returns in MF?
All right. So the mutual fund investments, and if I speak from the Indian context, out of 8,500 mutual funds listed or available in India, just 3 funds are Sharia compliant. So even in the other markets, the situation would be more or less the same. Probably in Pakistan, Bangladesh, even Sri Lanka, or in the Middle Eastern countries, Malaysia, etc., there are a lot of options of investing in mutual funds, in the Sharia compliant mutual funds. So in India, at least, there are just these 3 options, and the returns of mutual funds in India is, at the moment, the average return for the past, say, 3 years or 5 years is in the region of 17, 18%. If we look at the return for the past 1 year, in India, it's around 30%, because after the drop around COVID, when the markets has risen very sharply now, the returns are between 28 to 30% in India. So the past 1 year, but average returns over a longer period of, say, 5 years, 10 years, etc., between 18 to 20%.
Jazakallah khair, brother. There's a question from our brother here, Mubashir Sheikh. There's a long question. I will read it. Salam. I have noticed some Sharia compliant mutual funds tend to apply the Sharia compliant thresholds in a flexible way so as to make more companies Sharia compliant. Can you please comment based on your experience? And also, please confirm my understanding for companies who earn non-Sharia compliant interest income less than 3%, we should give charity from our gain on sale of that investment in proportion to what we own a stake in that company. Please confirm.
Right. That's a very good question. So I'll answer the second question first. You are required to purify not from the gains, but as long as you are holding that share, on the basis of that holding, you need to pay off that 2%, 3%, 1%, whatever is the interest income. So you need not even wait for the profit to happen. Even as you are invested in a company, you need to pay that off on a year-to-year basis, right? So that's that one. As far as the mutual funds is concerned, generally the mutual funds are all very, which are Sharia compliant as well, are very well regulated by the Sharia boards. So for example, the Tata Ethical Fund in India, it's monitored and regulated by Taqwa Advisory. So on a monthly basis, their portfolio gets vetted by the team of Sharia scholars at TASIS, and that's how, even if they have to make some changes, not only would they just kind of make the changes based on the advisory or the list provided by TASIS on a regular basis, but they would get that verified and signed by the scholars or the representatives in Mumbai from the TASIS office, and that's how they would go ahead. So it's all well documented, well monitored, and they would stay within the parameters of the Sharia norms that are set for them. If a particular fund, for example, chooses that instead of the TASIS norms, which are more stringent, they go with the Bombay Stock Exchange. So they go with the Standards and Poor S&P Sharia Index norms. So that's slightly liberal. So in that case, they follow the global norms, but even that is within the Sharia parameters. So that might be a bit liberal, but then a lot of companies in that portfolio might not be permissible by TASIS, and vice versa. It could be vice versa as well. So based on the opinion of the Sharia board and the norms that they follow, the standards that they follow, the picking of stocks could be different. but never would it happen that based on a certain set of preferences, the fund manager at times would use these norms, and at the other times would use other norms, etc. Because generally they are required to stick to that one opinion of one Sharia board. So this kind of uh, fatwa shopping doesn't work by and large with mutual funds. I hope that answers.
Jazakallah khair, brother. I guess it's a comment here, Muhammad Hanif. He's saying that trading in eToro is allowed since it's a Jewish-based company based in USA. Is that true?
eToro.
eToro.
eToro. I am not aware of that, but irrespective, even uh, generally speaking, if it's a Sharia compliant product, I'm not sure what that is. Is it a gold product? Is it a blockchain product? I'm not sure what it is, but the Jewish connection over there doesn't matter. If the owners are Jewish, but if it satisfies the Sharia norms, then going ahead and investing that in that product or that company is allowed, because the ownership doesn't really impact the Sharia compliance. As long as they comply to the norms, it is permissible to invest in that company or that product.
Jazakallah khair, brother. There's a question from anonymous attendee. The question starts like this: Who created this criteria? How riba is allowed up to 3%? What are your views about current market? Market is falling from weak. What you recommend?
Right. So that's a good question, that who came up with these criteria. So as I said that, regularly scholars from across the world, they meet one in the Islamic Fiqh Academy, which has its offices in Jeddah. So collection of scholars, and they discuss contemporary issues. So time and again, all these investments were discussed. Equity shares, mutual funds, IAF, portfolio. So all of these can kind of, now Bitcoin is being discussed at that level, and so on. So these are the norms. These are the conclusions that come by the consensus of scholars from across the world. They pass a resolution. That resolution gets recorded. Then AOFI, for example, takes that up and it sets a standard. So AOFI is from Bahrain, and it is the apex body for accounting and finance standards for Islamic finance, Islamic banking, Islamic insurance, right? Similarly, there are other standard bodies across the world. So Malaysia has its own set of standards. Singapore has a standards board. I'll need to put this on charge. So Singapore has its standard board, which is also a global thing. And we also have, I'm sorry, this needs to be connected. All right. I hope you can hear me. Am I audible?
Yes, absolutely.
All right. Perfect. So there are different standard boards in different countries, especially in Muslim countries, and they then take up that standard, and based on that, they build up their their localized version of that standard. So, for example, Tasis in India, they picked up this global norms, but based on local conditions, they said that let's not allow so much debt, let's not allow so much of interest income, and they kind of made it more stringent based on certain standards that they've deemed fit for India. So that's how these norms are basically adopted by different countries and different markets. And other question, market condition. So there has been some correction, because there is a bit of, with the new Biden government coming into power, they are planning something on the stimulus package. Will that happen? Won't that happen? As a result of all of that, there is a little bit of uncertainty globally. Whatever US does, it does in style, so that has an impact across the world. And that's how there is this uncertainty across. And India, for example, is also at an impact. The budget is coming up. The budget session is starting soon. So in February early, the budget is coming up. So everyone is kind of a bit waiting with bated breath on what to do next. So that's how there is a lot of correction in Indian markets, and globally there is some weakness as well. So as a result, it's a good idea to wait and watch. If you are someone who trades regularly, it's a good idea to go short, sell, be in cash. Maybe there would be a larger correction and you'd get an opportunity to enter at lower levels.
Jazakallah khair, brother. There's a question from Sheikh Saeed. He's saying that is Idafa has a platform to connect and invest?
Idafa does have a platform. So we have tie-ups with some of the largest brokerages in India. One of them is Angel Broking, another is Motilal Oswal. So you can then trade on their platforms. If you are interested in investing in mutual funds, etc., then we have another platform, which is our own platform for investing and doing all those kind of transactions in mutual fund schemes. So all of that is available. And if you get in touch with us, inshallah, we could share the details with you. Inshallah.
Jazakallah khair. There's a question from Brother Mateen. He's saying that are you offering training service and wealth management service?
Training or trading?
Training.
Training, yeah. So we offer training, as I discussed during the presentation. So our training wing is Azadi School for Financial Freedom. Azadi, for those who are not aware of Urdu, Azadi is freedom. It means freedom, right? So Azadi School for Financial Freedom, and that's where we cater to several different kind of training programs that I had discussed in the presentation. One of those programs is the 10 million program that I had discussed. So yeah, we do offer training and we do offer wealth management services as well. So if you want to, for example, invest in India at the moment, we will help you with planning and making those investments for you. And inshallah, depending on your goals, your return expectations, etc., your age, your risk profile, all of that comes into play. And based on that, we guide you with investments.
Jazakallah khair. Next two questions, I will take it together, the small ones. How can I invest in mutual funds with your help? And how to invest in international markets like US? So these two questions. So first is, how can I invest in mutual funds with your help?
Right. So if you are someone of Indian origin, then yes, we just need your passport details, your PAN card, your local bank account, or your NRE account, NRO account. And once all of that is in place, we can set up an account on the Bombay Stock Exchange mutual fund platform for you. And you can just very seamlessly start investing in mutual funds. So it's a no-brainer. We just have two open-ended mutual fund schemes that you can invest in: Tata Ethical, Taurus Ethical. One is a closed-ended fund, which is an exchange-traded fund, which is the Nippon India Sharia ETF, right? So we just need your details. On basis of that, we can set you up and you can start investing in mutual funds. It's very simple, actually. And the other question was?
The brother Salah is asking that how to invest in international markets like US.
Right. So if you are in one of these Middle Eastern or Western countries, or even in the Far Eastern countries, either you can set up a broking account, a brokerage account for the US markets from your country, or if you are a non-resident Indian, you also have the option of setting up that account through Motilal Oswal, that arrangement that we have. So through that, using your Indian bank account, you can invest in the US market straight away. The minimum investment can be 10,000 rupees. You can start off with as much as 10,000 rupees and invest in the Googles and Apples and Teslas of the world, right? Inshallah.
Brother, our time is up. So would you mind taking a few more questions, or you want to?
No, I'm fine. I'm fine. No
You're
problem.
fine. Okay. So Mir Abrar Ali, he's saying Jazakallah khair was a great session. We'll start saving money now. It's about time. So that's a comment for you. Brother Samir Kazi, he has a question. Assalamu alaikum. Most of us also have loans and we have to pay per month, emis per month. So in this scenario, isn't it best to first pay off our loans rather than use a saved amount in investments? Kindly reply.
Yeah, that's a very good question. So actually, uh, number one priority is to get rid of the EMIs. So, it's like a triangle. At the bottom of the pyramid is your emergencies, your takaful, your emergency fund, your health insurance, all of that, right? Life insurance is not compliant, non-Sharia compliant, right? Health insurance in a cashless manner, even in secular markets like India, doable. Best, if you are in the Middle Eastern countries, Far Eastern countries, you have the option of health as well as life takaful. So that's kind of very simple. Emergency fund, so maybe 2 to 6 months of your monthly expenses is something that should be kept in a liquid form. So either in a quick access bank account, uh, or in India, we get our equity investments liquidated in 2 days flat, right? So those kind of investments in large cap stocks, etc. So that's the basic. Once that is taken care of, then your entire focus should be in getting rid of that loan, whatever it is, house loan or your auto or personal loan or whatever it is, qarze hasana, even if it is interest-free qarze hasana, right? Or some kind of an Islamic banking loan, focus should be to just eliminate that ASAP. And once that is sorted, then you start off with your investment activities, wealth creation and all of that.
Jazakallah khair. Brother Mujahid is asking if you can please advise the steps to start mutual or equity investment. I mean, I think the initial steps.
If it is from an India perspective, then you need your PAN card, your address proof, which is your passport. In most of the cases, your passport works, and you will also need a local Indian bank account. Most of the times, even when it comes to other countries, these are the norms. Your basic identity proof, a bank account is all that you need to start off the investment. Uh, if you are planning to invest in India, then do get in touch with us. Uh, uh, our admin number has been shared with you. Uh, so if I'm maybe you can just note it down: +91 9967322224. Uh, Maybe I can jot it down later on and share it with you. Or you can get in touch with us at invest@idafa.com, IDAFA.com. So invest@idafa.com. You can get in touch with us. We'll share all the details. You just need the basic documentation in place. If that's in place, we can start off with the investment in less than a week's time.
Jazakallah khair. Brother Nisar Ahmad is asking that if you can explain little in detail about 1 crore investment plan. So if you have a very quick explanation for that, or maybe they have to contact you.
Or yeah, they can contact us, but we call this the 1 crore formula, which is very specific to the Indian markets, the kind of returns that we make over here. And what we said, we discussed over here, and we said that you reach the figure of 120,000 US dollars, but that would take you as much as 20 years, right? And if you are to be able to reach that figure much faster, sorry, it's 1.2 million US dollars. So if you need to probably reach that figure much faster, maybe how about in 5 to 7 years time, there is a strategy that we have developed. So in this 1 crore formula, we talk about that strategy, that how do you reach your first 10 million rupees or 1 crore rupees in a matter of 5 to 7 years. If you apply that strategy, you don't need to wait. Now this generation that we are dealing with right now, the millennials, people who are born after their late mid 80s. The millennials, they think they need everything instant coffee, instant noodles, instant gratification, right? So even the returns waiting for 20 long years is not an option. It ought to be instant. So there we discuss this particular strategy with a little bit of training involved on how do you go about adopting that strategy and making your 1 crore rupees in a matter of 5 to 7 years. So this course is about that. We are having this on the 31st as well as 6th of Feb. 6th of Feb Saturday, inshallah, in sync with ICK, we can tweak the timings to have it in more, uh, should I say, civilized times from the Middle Eastern perspective, inshallah. Right?
Jazakallah khair. And I think that that would be much needed that if we have a separate session with you, because there are a lot of questions I'm seeing here. Still, we don't have much time to answer all of them. I would suggest all the brothers and sisters to, contact you, and we will share your contact also on our social groups here. I will take two more questions, and then inshallah we'll end.
Fair enough, yes.
Okay.
Inshallah.
There's a question from Muhammad Inshauddin. He's saying that can you elaborate on pay yourself, which you said a bit earlier?
Right, right. So what I meant by pay yourself first is that instead of making those bill payments and household expenses and rent and loan EMIs and the works, loan EMIs, let's leave that aside, but your school fees, kids' school fees, and so on. We must commit ourselves to pay, say, 10% or 20% of whatever incomes we make. Commit yourself to make that payment to yourself first and foremost, right? So you set aside that 20% of your income, invest it somewhere for the long term, so that over a period of time it generates substantial wealth for you. And after you've made that 10 to 20% payment to yourself, first and foremost, now you need to budget and make the other kind of payment. So you need to run your household slightly on a less smaller budget. Your utilities bills, so you need to save on that. I know it's hot in the Middle East, but use less AC or whatever, So work that out, use less data on your mobile phone and go for a smaller plan and the works, so that you are kind of saving on these fronts, right? And then you pay yourself first, invest on yourself, so you reap those returns in the long term, which will help you in your retirement or your buying a house or your children's education. Your goals basically needs to be met, and this would help you in that direction. Hope that answers the question.
Jazakallah khair. I'm also seeing that a lot of questions that you have already talked about during your presentation. For example, how do we know either the company is Sharia compliant or non-compliant? So I'm sure. So I would suggest all brothers and sisters to, because we will be uploading this video on YouTube, and we will be sharing links, so you can also visit the video again to get your answers. I will take one last question from Brother Mateen. He's actually repeating his question. So he's saying, so is Idafa offering us a training service so that we invest on our own, or are they preferring us to invest through them by handling over to them capital?
So you are most welcome to open an account with us. The amount sits in your bank account or your trading account, right? So we can advise you in terms of doing that buying and selling, and we can support you. We can manage your account for you and all of that. You're most welcome to do that. But our priority number one is to train you so that you can do this on your own, right? We want each and every investor in our circle of influence to be independent of experts. We look at this word experts very cautiously, right? Because there are a lot of experts out there in the market who claim to be experts, but then they have a hidden agenda to dupe you of your hard-earned money. So there are these experts who appear on CNBC and such financial television channels or even YouTube channels, etc., who give you advice on what to buy, what to sell, etc. And then you realize that while you are buying the shares that they have advised you to get into, they and their group of investors are actually exiting them. So they are now making money, making profits at your expense. So these people, these experts, they pay 500,000 rupees, a million rupees a month to these TV channels so that they appear on those channels and make these recommendations. But they when they pay so much to be on the channel, they also recover the kind of investment that they've made by making profits on the markets at your cost. So we say that listen to all the experts, but when it comes to making decisions, even if I have made a recommendation to you, I would say take decisions after you have applied your mind, after you have done your own research and take decisions only after that. So keep your eyes and ears open, hear from whatever the market has to say, but when it comes to making the final decision, have a mentor in place, have a knowledge kind of environment where you are continuously learning in place, and then take the decision based on after consulting the mentors and your peers. So we create this kind of a group where you are continuously in touch with people who are having the same kind of education that you have, and collectively you come to a conclusion whether it's a good idea to buy a stock or not. So we create these WhatsApp groups. Now we are moving to Telegram. So Telegram groups, Facebook private groups, etc., where you will all be in communication with a community of other Sharia compliant investors, right? So our focus is to train you, make you the expert rather than you relying on other experts. I hope that answers the question.
Jazakallah khair, brother. Brother, there are many questions out there. So, I mean, if you allow me, or if you want, I can read the questions, and or if you want to end the session now, I can
We
read the
can go
questions.
on. It depends on
All
your
right.
logistics,
Okay.
or maybe
So,
we can share our details so people can write to us on WhatsApp on.
exactly, and let me announce this also on this chat box. Azadi admin has shared all the contact details of WhatsApp and Telegram and even the email. So if you can note down all the information, please contact brother there. So let me take few more questions then. Um, Let me go down. Um, Afnan is asking, is Islamically app is good? Are they following Sharia criteria strictly?
Yeah, Islamically is a good app, and uh, it's an international company. The scholars are from Saudi Arabia and Canada and other places. Sheikh Al Qari from Saudi Arabia. It's following the global norms. So, for example, if when we have Islamically services in India, between TASIS and Islamically, TASIS is stricter. We go with TASIS generally, but we don't have a problem if our customers use Islamically as well. And so for reference, even we have subscribed to Islamically services. And as a matter of fact, a lot of people would prefer that they have their own, they have access to Islamically straight away. So in fact, we have an offer from Islamically for the Indian markets, where instead of the 3,750 rupees that they charge, people through Idafa Investments can subscribe to Islamically for just 999, right? 1,000 rupees. So one third of the original cost, less than one third of the original cost. So Islamically is a good service, uh, uh, following the global norms, and but we choose to follow TASIS. Right.
Jazakallah khair. There's a question from brother Hanif, Muhammad Hanif. Can we book profit more than 100%? I have read once that we cannot do business 100% profit.
Yeah, I think equity markets, and there is no problem in, you know, so there are certain things now what we need to be very clear. And so I don't want to go into fiqh generally, but there are essential items, food grains, etc., on which you cannot hoard and make excessive profits. It's not allowed in those things. But when it comes to items of luxury, etc., or even investments in equities and so on, there is no restriction on the kind of profit that you can make. Investment is all about committing your funds today, so that sometimes in the distant future you make multiple times more profit than your original investment. So we ideally would look at 10 times profit, 20 times profit, not just 100%, but thousands of percent, right? So that's what the stock market investment is all about. And when you do the, if you inshallah choose to do the 1 crore formula, we talk about this in length, that what is the profit potential when you invest for the long term, right? So phenomenal amount of money can be made when you are investing for the long term, inshallah.
Inshallah, Jazakallah khair. Brother Umar Chitapur, he's asking, can we take term insurance or health insurance in India? I think it's a sort of fake question, probably.
Yeah, not a problem. Health insurance, cashless. Scholars have allowed that, especially now with the COVID thing going on. You can go for cashless policies in the health insurance plans. Reimbursement is not allowed. So, if, for example, uh, God forbid, you meet with an accident in a remote area on the highway somewhere far away, you get admitted in a hospital, you pay 25,000 rupees in fees. Now you can't come back to Mumbai and say that, I need the reimbursement. That's not allowed from a Sharia perspective. But if you opt for a cashless option, going to the hospital pre-planned, get the checkup done, or the admission, surgery, etc., all pre-planned and completely cashless. So scholars have allowed that kind of a policy even in the secular environment like India, etc. Any kind of life insurance policy, whether it's an endowment policy, a term policy, nothing of that is allowed in India, because the contract of life insurance itself is haram. Not because it's insurance, but because there are flaws in the contract itself. When you do life insurance under the taqaful, the Islamic insurance model, wherever it's available across the world, that's perfectly fine. Unfortunately, we don't have Islamic insurance in India, so life insurance is not allowed in any format in India. Hope that answers the question.
Jazakallah khair. Brother Shakil Parker, he's asking, if a company is into a real estate with almost zero debt, but if such company invests in a hotel industry, the revenue of this hotel is less than 10% of the total revenue. Is this company Sharia compliant?
Right. Shakil bhai, good to have you, mashallah. Alhamdulillah. Yeah, so this scenario, if the real estate investment and hotel sector less than 10%, so that's fine, because the limit of non-compliant operations is 25%. So if a company is into real estate, generally speaking, but up to 25% is tolerated when it comes to, for example, let's take the company ITC. ITC in India used to be a 100% tobacco company. But over a period of time, very consciously, it has been diminishing its portfolio of tobacco and getting into textile and real estate, hotels, all of that. But the point over here is that it is trying to diminish its purely haram portfolio of tobacco products, right? So they've brought it down from 100% to 48% now, and they are still trying to shrink that, right? So if at some point of time it gives up its hotel business, brings the tobacco portfolio down to less than 25%, then ITC would become, everything else being normal, it would become a Sharia compliant company. So similarly, this real estate company with 10% exposure to hotels would be Sharia compliant to invest in, other things being clean.
Jazakallah khair. Brother Mateen is asking questions on basics of stock. When we want to buy or sell, how is there always a seller or buyer?
Yeah, that is possible. Always a seller and buyer is possible in mature and highly liquid markets, right? Or highly liquid shares. There are certain shares in India as well where you don't find many buyers and sellers. So there are a lot of listed companies where there is no trade happening or one-off trade happening once in a month or so on. So these are illiquid stocks. They are listed, but they are illiquid stocks. So it's really important to see that whichever share, whichever company you invest in, they are highly liquid. There is sufficient volume in that particular share, trading volume on a day-to-day basis, and substantial market cap. So when we do these courses, we make it mandatory for all the students. The 3 months of the program, the 3-month program, we make it mandatory that you cannot invest in a company which is a sub uh, uh, 50,000 million rupees, right? So any company which is lesser than 50,000 million rupees, you cannot invest in that. So we make sure that you are investing in highly liquid companies rather than those where there are no activities for weeks together. So it's really important to invest in those kind of stocks.
All right. There's a question from anonymous attendee, and I think it's a continuation of some of your talks. How is it possible to say riba can be collected up to 3%?
So riba is not these companies. We have to understand the overall environment in India, US, UK, etc. There are no Islamic banks. Now, if these companies are in business, they would have money which need to be stored. They can't keep it at their houses. They need to put it in the banking system, right? And when the money is in the system, it would earn. So obviously, these companies, when they are holding the cash, they have no limitations to follow Sharia guidelines, etc. So they would keep the cash in the bank and earn interest on that. Now, this is not the main line of business for those companies. These are like incidental incomes because the company has the cash, it has to keep it in the bank and nowhere else, and it's earning interest on that. And if this interest crosses the 3% mark, the interest income, then investing in the company is not allowed itself. But if it is within the 3% mark, the Sharia scholars, what they say is, we will tolerate up to 3%, not beyond 3%. So even up to 3%, it needs to be purified. So in this situation, what happens is by purifying this, your 97% is permissible, right? By purifying this, the rest of the money is permissible. If the scholars do not give this option of investment in a secular country like India, where there are no Islamic banks, what will happen is people have no choice but to hand over their hard-earned money to friends, relatives who are into business. And in most of the cases, what we find over here, low integrity levels, leave aside the profit share of that investment, the capital itself is lost in most of the cases, right? Or people would end up investing in Ponzi schemes, etc., and then lose their entire thing. So in order to facilitate a proper channel of investment, because one of the rules of the Sharia is to, besides safeguarding your dignity and your iman and your your family, your deen, one of the rules, one of the objectives of Sharia is also to safeguard your wealth. The role of the Sharia scholars is to facilitate safeguarding your wealth, help you in safeguarding your wealth. Just look at the depth in which Sharia takes care of us. So out of that role, the Sharia scholars, they tolerate a few things so that we can invest in the right place and earn halal income. So here, this is not permissible. This is not a permission to kind of invest in companies and earn up to 3%. No, this is not permission for that. This is tolerating that 3% and then purifying it. The condition is to purify that 2%, 3%, 1%, whatever interest income that company has earned. And that way, the rest of the wealth that you have is permissible for you. I hope that
Jazakallah
answers.
khair. Yeah. I will take last two questions, brother. Brother Ahmed is asking, first of all, thank you for your efforts this session. Jazakallah khair. My question is, how much we can invest and what is the ratio of calculation percentage?
Ratio of calculation percentage for asset allocation.
He has not elaborated that.
So as far as investment is concerned, uh, you can start in Indian markets, you can start with as much as 150 rupees. So there are products where you can start off with 150 rupees only. Kids can invest from their pocket money if they want to, right? So that's the thing. On the higher side, sky is the limit. There is no restriction on how much can you invest. If you're talking about asset allocation, then I would say based on your age, your risk profile, etc. Uh, maybe depend. So if you are a 30-year-old, for example, you've just started off and you're 30-year-old, you've started saving, and you want to create a portfolio, I would say 70 to 80% should be invested in equities, 5% to 10% in gold, and the remaining 10% in something like Rehbar in India, or maybe 20% if you are in Middle East, etc., and can invest over there, maybe a sukuk product, 20%. So that's a good spread, 30-70, right? If you're someone who is 50, then I would say 40% in equity, 40% to 50% in a sukuk product, and then 10% in gold or gold ETF, etc. So that should be the spread generally. Of course, all of this after you've taken care of your takaful and emergency funds. Right?
Jazakallah khair. So I'm taking the last question from brother Muhammad Shuaib. He's asking, the purification criteria also apply on capital gain or not?
No, if so there was an earlier opinion where on the dividends was the purification applied, but the later opinions that are coming now, it's not got nothing to do with dividends at all. It's on your portfolio itself. So straight away on your portfolio, you just do the purification, and in that situation, the capital gains is completely for yourself. No purification required on that, because on the source itself you are purifying.